I am mining investor and editor of Resource Stock Digest. Head out of the Del Real here with my partner, Senor Mr. Nick Hodge, who's an investor and the publisher of Daily Profit Cycle. This is the 283rd episode of our weekly therapy session that we call Investing in Bizarro World. We're going to talk markets. We're going to talk the Fed. We're going to talk gold. We're going to talk proud technocrats. And then we're going to get into the upcoming conference season, which should mark the beginning of a busy 4 months to close the year out as we end the month of August here. Before we get to all of that, Senor Hodge, how goes you today, Nicolas?
Those are all wonderful things to talk about, Gerardo. I'm doing very well. The summer is winding down very quickly. It's going to get very busy very quickly. And so I'm gearing up for that mentally and physically and gear-wise as well. We were just talking about some travel that we're going to be doing here soon. And we need a bit of gear for that, including the old boots to get the mud on them, as it were. So we'll be seeing you in person soon, and more details to come on that for free and paid subscribers alike. But to answer your question, I'm very well. How are you?
Good to hear. I'm healthy. The wife still loves me. The babies still love me. My boys, the kids, and everybody around me is healthy, trying to stay positive and smile through the chaos of the world. It is an interesting time out there.
I was saying recently, or at least I was thinking it. I don't know what I say out loud anymore. If it's my internal monologue, but it's been going from Bizarro World to Twilight Zone. Then for sure, it's like it's living like it's almost detached.
I don't know if it's this moon cycle or what it is, but I'll give you an example. Do I want to share this? Fuck it, I'm gonna share it. I'm gonna start by telling you all a story. You all don't know this. Nick knows this. My close friends and family know this. But 2 years ago, the part that you all do know is that my father passed away unexpectedly. 3 months after my mother-in-law passed away unexpectedly, and I won't get into the details of what happened. But the day after Christmas that same year, so this is all between April and December the 26th, my mother was kidnapped, right? And as you know, Nick, that was, a bit of a trying time. Took me 3 days to figure that out. Thankfully, knock on wood, we were able to figure that out and got her back safely, unharmed, untouched. Thankful for that. So I share that because that led to my wife and I going, man, that's a tough 9 months. That's a lot of hits, right? My wife was real close with my dad. I was real close with her mom. So it's like losing two very, very close people. And then we're dealing with the situation with my mom at the time. And so we decided to start therapy, right? And therapy has been an amazing outlet. It's, it started with the discussion around, our parents and in childhood and my mom's situation and what that looked like. And it has now morphed into everything. After we love our therapist. She's amazing. Shout out to Michelle. Half the time we just say hi and, catch up on what we did for the week. But then the other half, we're working on real stuff. So I say all that to say that it's been a couple of years now. And so now the conversations have morphed into different things. And as you all know, those of you that know me, I run pretty high strung. I'm pretty hyper. I love life. I'm passionate about everything that I do. And that sometimes can lead to conflict with, just people that for whatever reason, don't have their head on straight or are extra obnoxious. And maybe some of that is me. And so I'm working on some of that through therapy, learning to slow myself down, learning to not be so reactive to situations, learning to, count to 5 and just ask yourself, is it really worth it? And all of this, right? So we're out last night. It's my wife, it's my brother-in-law, it's my sister. We're at a concert, have a phenomenal time. We come back from the concert, get to the parking lot. There's a boot on the car. And to make a long story short, young man comes out. He's the age of one of my sons, probably. Can't be more than 22. A younger kid, smaller kid. And I say, hey, man, I'm sorry. I did know we couldn't park in this parking lot. I didn't see a sign anywhere. And let us know what it is so that we can get the boot off. And, we'll take care of it. Apologies for parking in your parking lot. And he goes, yeah, the sign's over there. So he points to this sign that's 15 feet away. And I said, man, with all due respect, that sign's way back in the corner. It's nighttime. And it's not specific to the event or the venue, but not a problem. And so the kid's response to me is, it's not our job to teach you how to read. So the therapy isn't all the way there yet. You meet him, what the fuck do you think you're talking to? And so we get into this dialogue and then the part with therapy helped me, Nick. And then I encourage everybody to go to therapy. I think everybody should be born with a therapist, right? I say that half jokingly, but after I did that, I looked at this kid and I said, one, he's smaller than me. And I hate bullies, right? I don't like bullies. That wouldn't have been a fair fight. Two, he's younger. He's the age of some of my kids. So I was like, let me see if I can just teach this kid, like, hey, like, this is how you approach people. This is how you respond to people. You're going to say this to the wrong person on the wrong day, and you're going to get in a tougher situation than the one you're about to get into with me. So I pull him to the side. I have this conversation. One of his little friends comes running out. One of the other security guys, oh, you don't touch my guy. I'm like, listen, man, I'm being nice to your guy over here. I'm going to be less nice to you. Let us have the civil conversation. The other guy calls the cops on me as I'm trying to give this kid some life advice and just help him out on how to approach people in the middle of the night, right? The cops come, they laugh it off, show him the ID. They get the boot off the car. We pay the $100 and we go home. And I'm looking at this and I'm going, all I was trying to do was be nice and pay the kid the $100 to get the boot off the car and apologize for parking in a parking lot because we legitimately didn't know that we were doing anything wrong. So to your point, I don't know if it's the moon cycle or what it is, man, but the jujus are weird out there right now. Be careful out there, folks.
It's weird, Juju. Where were the, obviously questions come to mind, but where was the security attendant when you were parking the car?
Non-existent. Non-existent. And mind you, it was in front of it's adjacent to the nightclub where the concert was, where the venue was. And half the parking lot was empty. I mean, the business wasn't open. There wasn't anything there going on. So no idea. At the very end, the cop said something interesting. He said, I said, officer, with all due respect, what are we waiting on? And so he goes, well, we're waiting to see if they even have a valid permit to be putting boots on people.
Well, I was going to ask that too. Like, you just get an instant boot in a private lot? How's that work?
Yeah. And I said, listen, I'm not trying to get anybody in trouble. Like, we just want to go home. It's 12:30. My kids are at home. Like, we're just trying to get back to the house. Like, can we just pay the $100 and get out of here? He's like, yeah, if you're fine with that, that's fine. I said, I'm good with it, man. I just want to go. Let me get out of here before somebody else says something stupid, right? And so we get out of there, made it home safe. All's well that ends well. But yeah, again, I don't know if it's the moon cycles or what's going on, but a lot of wonkiness. That's my therapy story / mom kidnapping story / it's a weird wonky world out there, man. It's a twilight zone for sure. So be careful out there, folks.
No doubt.
Let's get into the markets. My favorite quote of the day. You all know I have great disdain for the Fed. I am one of those people that believes the Fed was congressionally mandated with certain tasks. And I believe the Fed has drastically over the last, century plus has absolutely overstepped, right? Has overstepped what that mandate was. And I absolutely believe the Fed should be dissolved. Like, I think it does more harm than good. I think it spreads wealth inequality. I think it helps finance unnecessary wars. It puts our military and our troops in harm's way unnecessarily to keep the military industrial complex afloat. Love my military. Don't love the institutions that, enable young men and women to go out there and get hurt over issues that half the time we have nothing to do with. So that's why I have disdain for the Fed. So why do I bring this up? Because September's coming and now we have Jackson Hole, which is a very important meeting between the brightest, supposedly, and the most well-connected financial people in the world. And the Philadelphia Federal Reserve president, Patrick Harker, has now come out and said that, he used to be in the camp of not endorsing rate cuts. He now is very much in the camp of starting rate cuts in September. But the quote that just made me laugh was, it's a sarcastic laugh. He said, I'm going to read it verbatim. I am very proud of being at the Fed, where we are proud technocrats. That's our job. Our job is to look at the data and respond appropriately. When I look at the data as a proud technocrat, it's time to start bringing rates down. And I'm like, is this like the Fed version of Pride Month for you, dude? Like, what are you talking about, a proud technocrat? And what are you talking about getting ahead of the data and reacting to it in the most appropriate manner? You all are the enablers of the worst wealth inequality and transfer from the middle and the lower income class to the rich. Over the last century, it's the institution that has enabled all of it. And so when I read a quote like that, I'm like, man, these people are really disconnected from the world. But they're not being connected has real world implications. The real world implications, and gold is starting to sniff this out, obviously, is that rate cuts are likely coming. And the argument now appears to be 25 basis point rate cut or 50 basis point rate cut. We'll see in September. Either way, I think you're going to get a sustained level of rate cuts. That's a lot there, Nick. Any thoughts on any of that?
No, all you say is true. It's been over 100 years since the Fed. There's a reason we lean libertarian. harkening back to, the Ron Paul and things. Who was, talking about eliminating the Fed, and he was gaining traction with that. And we haven't really seen a third party gain traction since Mr. Paul was, gaining traction with those sort of messages. And I'm just, tying it into sort of the election year, and we had the Democratic National Convention. So it's been 100 years since the Federal Reserve. It's been 50 or so years, I'm, ballparking here, since the end of Bretton Woods, since we decoupled from the dollars and the dollar from gold. And obviously neither of those things have been good for the common American. You mentioned Jackson Hole, where all the common Americans gather to discuss their household economic policy, right? So, no, they are completely disconnected, and they run in their own circles. And, it's not conspiracy, right? And we read those books, or I've read those books, and I'm there, call it conspiracy, Creature from Jekyll Island, those sorts of things. It's just people who run in the same circles, who have the same interests, who go to the same schools. And that's on both sides of the political aisle. Yep. I point out again that Jerome is a Republican, remember? And he's going to cut rates heading into an election with a Democrat in office. So they run in the same circles, and they have the same interest. And that's one of the reasons you're going to get cuts, is because they're starting to feel it as well. The cash flow pinch is real. The high costs are real. The revenue, now being at pre-pandemic levels is real. And that doesn't jive well for your cash flow statement. Even with stocks going up, when you got to make payments on the debt that's so high, et cetera. So that's why you're going to get a rate cut, because they all need things to go in the same direction for their IRAs and 401ks to, continue to be sound, and for there not to be literal chaos in the street. And that was the other point I was going to make, is that not only does the system as it is, Federal Reserve, et cetera, foster wealth inequality by, allowing asset owners to get wealthier while the non-asset owners don't and continue to struggle. But they've gotten rid of the natural economic cycle as well. And I was writing about this today in Hodge Family Office, is that, in that, what I was going to say is, in that way, not only do they breed wealth inequality, but they breed more anxiety, right? Because it's like, we all know the things, like, we know there's $35 trillion in debt, and we know that the math doesn't jive. The math ain't mathin', as people say now, right? And it's like, but there's always been, not always, for the past 30, 40 years, whatever, there's been financial engineering that has allowed that house of cards to stay propped up. And so even when you get, in the events of, the first week of August, and the highest volatility and, since 2020 and 2008, and things happening in Japan that we haven't seen since 1987, that shit can get memory holed and papered over in 2 weeks time. And it's like, wait, did that really happen? Does that really have implications? Or is it just like, pay no attention to the technocrat behind the curtain, and we got this? And in that respect, it breeds, like I say, anxiety, because even for the haves, the asset owners, it's like, oh shit, we got to have our fingers on the button, literally, as I was writing, with our heads up the ass of this fucking corporate lawyer in Jackson Hole, right? To see, what is he going to say? Because
proud technocrat.
It does dictate our net worth, right? So,
absolutely.
Anyway, and it's fucking bullshit, is what I was going to say, that's where the system is, that we've gone so bastardized from, true Austrian economics and true price discovery and true economic cycles, et cetera. But anyway, that's where we are. And you said it, gold sniffed it out, the highest that any human has ever seen it this week, above $2,500 an ounce. So, there are inklings of what's happening behind the curtain, and how things are going to play out if they do happen to lose control. But, remember what I was, remember what I was saying. The VIX has come all the way back down. The S&P has gone back up. So anyway, we'll see. We'll see what the, speaking of technocrats, what the technology companies do next week, because I was telling you, NVIDIA earnings are the end of the month, and that's sort of make or break for where we are right now. But anyway, long answer. What else? No.
I think it's the right answer, and a great answer to the question that I asked, right? And then we can't talk. Well, let's get the commodity outlook out of the way, because it's going to be relatively short this week on that front, right? I correct me if I'm wrong, but I think we both agree likely that gold looks good. Silver looks good technically. Copper's looking great. I mean, it's at 412, 413 here after being below the $4 a pound level. Again, I think copper's sniffing out the rate cuts and likely more easing across the world to discourage a global recession is likely coming. And so any disagreements there on any of those?
I think that there's a lot of uncertainty, and I think that it's non-committal. I'm talking about copper, and I would say the same of oil. Look, oil has erased all of its gains so far. I was saying last week, that was one of the things I was watching, because we were talking about we're waiting for an Iranian response, and I was telling you, I don't know what the response is going to be, because Israel just showed that they can fucking get you anywhere, and the other folks can't do that. So anyway, I was wondering if oil was going to go back up, even with that geopolitical tension and us waiting for that Iranian response. Oil's, back down below $80, and it's erased its gains for the year. So it's muddling along. All the commodities in general, like the CRB, has pulled back, and again, context is important. Time frames matter. We talked about this a couple of weeks ago. I think we're still inside the super cycle. And again, if you look back at that CRB commodity index at the last super cycle on the way up, it pulled back a couple of times, during the .com era,
Sure.
et cetera, and 2008. So, even if you're in a commodity super cycle, these in the short term, they're not immune from selling, right? Global margin calls, carry trades, whatever it is. And if the economy is going to slow, either in the U.S. or globally, for however long, 3, 6, 9 months, that still doesn't mean you're not in a decade-long commodity super cycle, right? And so, commodities do look, weak-ish, right? They bounce back a little bit, but they're not recovering all the way. And so, I just think it's going to take time to work through. And that's actually another thing I was writing about. It's like, when I speculate on things, it's a 2 to 5 year time frame, and it's most of the positions we're in Hodge Family Office. It's barely been 2 years, right? So that 2 to 5 year time frame is not even halfway through within a large extent of it. And so probably a pretty good segue to talk about lithium, actually, is what I was thinking about as those words were coming out of my mouth, because, even uranium going all the way over 100 and now coming back down, it's got a 70 handle on it, rated support there at 80, and copper went all the way to almost a 5, and, it's now at 4, which is bounced back up from 3 something, but it has also come down a bit. And so it's just worth talking about the ebbs and flows of the commodity prices and what the context is still for the overall trajectory of them, and how the need for them isn't going away, right? So we want to talk about lithium?
Yeah, no, I think we should definitely talk about lithium. Patriot Battery Metals just put out a PEA, and I'll caution, this is a peak. This is on one part of one part of the trend, with tons of exploration upside and the cash to drill this thing out and really advance it. But the peak was a pretty damn a good peak, right? You have a net present value of nearly, I think it's something like $4 billion, if I'm not mistaken. You have CapEx that is, really, really, really moderate given what people were thinking it was going to be. You have access to cheap green energy, hydropower, right? So there's a lot in there to like. I know the one metric that people took issue with, some people took issue with, was Patriot using a spot price, some 35 or 40% higher than the current price. And look, the bottom line is, we all agree, I think, everybody that's watching the space and that's been in the space, for some time agrees that, China and African supply, Chinese and African supply is definitely glutting the market in an artificial way that's not sustainable in the mid to long term, right? I don't pride myself a lithium expert. I don't pride myself an expert on almost anything, but I know the people that are. I know the people that have seen these cycles. I watched the presentation by Ken Brinsden, and he was asked that question, and the way he answered, he basically said, look, these prices aren't sustainable. And if we're not going to be in production until 2029, then it's absolutely reasonable for me to assume that the price will be at the very least 35 or 40% higher than the current spot price, because I've seen these cycles before. And again, I think the spot price will be, a multiple of today's, at the very least 2,000, not 890, not 900. And so time will tell. But the bottom line is this, folks. These are all speculations. It's a world-class deposit. It's got world-class exploration upside. I'm talking about Patriot now. It has a world-class team that knows how to build mines, knows how to monetize and negotiate these things. And if you believe that 1,000 lithium or 890 lithium is the future, nothing gets built. And that in itself takes care of the low price problem, right? The cure for lower prices is lower prices, as Rick Rule likes to say. And so the lower prices are going to knock supply off. We're seeing it already. The lower prices are going to demotivate from people to continue expanding and ramping up their production. And this is at a time that demand for data centers and energy storage systems is increasing at a pretty rapid rate. So I'm in the camp, lithium prices go back higher. I'm in the camp that the lithium cycles are quick and violent. in 1 to 2 years time, you can have all-time lows and all-time highs. And I'm of the opinion that at the end of the day, you bet with your dollar. You don't like the PEA assumptions, don't buy it. You like the PEA assumptions? Hold on to the bulk of your position like our group has, right? And so we'll see at the end. It's what makes the markets beautiful. You're accountable with your dollars. You and I are taking a trip in a couple of weeks that I think is going to be maybe the most important trip, on the business side of my life. And for a lot of subscribers and family and friends, that are positioned, I think it's going to be a very, very consequential trip if it plays out. Now, I'm betting with my dollars. I'm betting with my checkbook. And so all you can ask of whether you're a newsletter writer or somebody that does a podcast is put your money where your mouth is. And if you have an opinion, vote with your dollar, right? Either write the check for the company or don't buy the stock if you don't like the assumptions. And, there's many sectors to dabble in. You got gold at all-time highs. You don't have to dabble with lithium. If you're a contrarian like me, you're loving the setup. I'm actually kind of in a weird masochistic way, hoping that these prices for Patriot stay at, current levels for the next 6 to 12 months. Because if I pull off what I think we're going to pull off with a couple of things that we have pending, I'll come right back around and double down on that position at current prices. To me, it's a no-brainer. Now, maybe I'm wrong, maybe I'm right. We'll see.
Yeah. Sound like the boss in Office Space. Yeah. No, I got some things to say about the Patriot thing. I glanced through it. I watched the presentation, and it relates obviously to the commodity supercycle. And I've also sort of done my own thing with Patriot, right? Like,
yep.
I never recommended it, and so I was able to just buy it and sell it as I pleased on sort of my own terms, and I've done that. And that's what I was looking up. I was just going to see my history with the stock before I launched into my little Patriot thing there. So obviously, because of you, I was in at 34 cents Canadian with warrants at 75 cents, which is a good price if you can get it. And I was able to peel out, no one nails absolute bottoms and absolute tops. That's an absolute liar, right? That's a Bernard Baruch quote that Rick Rule also likes to cite. But I was able to peel out of some shares at the $16 level and the $14 level. I'm just looking at my history here. And I retain a significant portion, right? Like a meaningful portion. And that was just from the private placement tranche in my brokerage account, as I've told you. I've also bought some once we knew what the discovery was, and as it became clear it was world-class, I started buying some on the way up in a converted Roth IRA that I'd never have to pay taxes on, right? And so I think about this in different ways, right? Because on the one hand, I've more than paid myself to own the shares and
Sure.
have made plenty of money. And on the other side, I have this thing in a Roth IRA that I'll never have to pay taxes on no matter how it goes. And so now I'm thinking about that more of the development scenario, right? As opposed to, shorter term, how high is it going to go, et cetera, with the private placement money. So anyway, the numbers is Canadian 2.9 billion NPV with an 8% discount rate. That's 2.2 billion US. And the capex is 640 million US Canadian, or 487 million US, which you're right is not that much given the scale of the project.
That's after tax, correct? Important to know after tax.
After tax with an 8% discount rate, and the IRR is 34%. And this is a phased approach, so it's an initial open pit, and then after so many years can double the throughput by expanding in an underground scenario. So the all-in sustaining cost, yes, everybody's talking about the price that they used, which was $1,375 per ton of 5.5% spodumene. So the price I think currently is right around 800. It might have a 700 handle on it, but context matters. So the all-in sustaining cost, that's all in AISC, is 593. So that's below even this price of $700, which not a lot of people think is sustainable. So think about it sort of like $700-800 spodumene is like $50 uranium. Yeah, it might be, in the case of uranium, twice what it was a couple of years ago, but
Yep.
Nobody's building uranium mines at $50, right? Because you're not getting paid. So similarly with lithium, like you said, there's not a lot of production that's going to come online at sub $1,000 spodumene. So those are sort of the numbers. I don't think I wrote anything else down there. Some superlatives, like it would be the 4th largest hard rock mine in the world eventually, right after it ramps up and does that underground scenario. So that's a thing, right? Like that's a big ass mine. And so I guess I was going to talk about Perpetua a little bit, which is a company we mentioned last week, and how long that cycle took, and then all of a sudden it has a mineral that there's plenty of in terms of antimony, and then all of a sudden there isn't plenty of, right? And that's a stock that's gone from $2 or $3 to $11 or $12 in a 6-month time frame. So it's also a company that we've been involved in for a decade or so, and has been in permitting for the bulk of that. So you got to think about all those things, right? Is this a mine that's going to get built? Yeah, man. It's a mine that's going to be built. It's construction's not until I took a screenshot. I don't have it. I think 2027 or something like that. Like, that's not now. That's not at $700 spodumene. That's not in 2025. That's not in 26. That's in 2027 when, likely, even if the EV adoption has been delayed, that they're going to start to be more adopted then. The battery tech is going to be improved. There'll be more charging stations. And so it could turn out to be a blessing in disguise. To your point about the next couple of months, if commodities remain soft and, the market reacts to the PEA and they don't like what they see or whatever, it could be soft in the short term. Again,
Sure.
Look at Perpetua or the time it wasn't permitting or whatever. But at the end of the day, am I going to be thankful that I hold it in a Roth IRA once the mine gets built, and if I can afford to hold it to 2027, 2028? Absolutely, man. We didn't really talk about, you mentioned how quick the lithium cycle can move, and that was the last thing I was going to say.
Yeah.
So we've tossed out a couple of lithium prices. So the PEA was done at $13.75 a ton. The price right now is like $800 a ton. But, in 2022, early 2023, it was $6,000 a ton, right? So tying it all the way back to the beginning of this podcast and the conversation, what we've done is, we've gone full circle since the pandemic, right? Like, all that stimulus money is gone. All the euphoria is gone. The sales and the revenues levels are back at 2019, 2020 levels. And that's the same thing you see. I'm just looking at the spodumene price chart, right? It's like the spodumene price chart's come all the way until back now.
Sure.
So to where it was before, there was Wall Street silver and, bid and Tesla going to the moon and all this sort of stuff, right? So it's getting back on some sort of normal trajectory, and it's not going to settle out at $700, $800, the same way that uranium could never settle out at $50, right? So anyway, those are just my initial thoughts. It's been less than 24 hours that they had to talk just right after they put the press release out. So I imagine there's still more people that have to watch it. But resource things take time. There's different ways to think about things. And anyway, I encourage you all to dive into that PEA and share your thoughts with us as well.
Yeah, and again, I want to add, this is a 24-year mine life, right? So there's scale, there's life of mine that's going to be attractive to any major that wants to dabble in the lithium space or energy company. There's grade, there's access to high grade via underground. And again, it just includes one part of this gigantic trend that remains largely underexplored. It's still largely underexplored, guys. And gals. So look, again, you bet with your dollars, I bet with mine. We share our thoughts. We do it for free. Money back guarantee. What can we say?
For now.
For now. We got to talk Democratic National Convention. I want to bring it up for a couple of reasons. Last week, I criticized the Trumpster for focusing on the theatrics and not so much on the substance and the policy, right? And frankly, still, outside of the Project 2025 things that appear to be closely tied to him and former staff members, and looks to be like the blueprint for what the party wants to advocate for. And again, there's some things in there I like and some things in there that I don't. But now it was the Democrats' turn. And look, again, some great speeches. Michelle and Barack, two of the best orators probably in all of politics, right? However you feel about their politics. They could talk, man.
Full-throated.
I mean, they just, right? Great work on that front. I still am not really aware of the specifics of the policies, but we are starting to get more policies from Kamala Harris. And some of the stuff I'm all for. Family tax credits, incentives for daycare, expanding healthcare, lowering drug costs, some of which Mr. Biden has done. And to Mr. Obama's credit, he did that well. It was highly criticized at the time. And now everybody's, happy that they get, some more healthcare options, though the premiums, we won't get into that right now. are through the roof, but that's consistent with the whole inflation theme. Back to Kamala. What I really don't like, and this speaks to America, because it became a talking point, and very few people caught the fact that it only applied to people with more than $100 million in income. And that was a proposed tax on unrealized gains. Let me be 100% clear. I think the proposal is flat out BS. I think it's bullshit. I think it's a way, it's a gateway tax to start with the wealthy, the super wealthy, the 100 million and up. You're going to tax them on the sale of a home that hasn't happened, the appreciation of a home that you haven't sold, right? So if your home appreciates, I don't know, $1 million, you'd have to pay 25% of that appreciation. But what happens if it drops $1 million the next year? We get a depression. Like, do we get the money back? Of course not, because we're too busy fucking bombing everybody all around the world. Of course we're not going to get the money back, right? So the same way that I don't like, the right's plan to increase the retirement age, basically make you work longer for you to get the Social Security money that you were promised when you were busting your ass in the 40s and 50s and 60s and 70s and 80s and 90s. Same way I don't like that, because I think that's a tax grab on the lower class and the middle class. I really don't like this grab over here, even though, look, I don't have the 100 million yet, but I know it's a gateway tax to go ahead and then go, okay, well, you know what? 100 million. Yeah, that's a lot of money. I think 50 million is a lot of money too. Let's put it there. And then it's going to be 20 million. And before you know it, just being a millionaire is going to be a bad word here in America. And we've been there before, if you know your history, right? Where it's the whole eat the rich thing comes from a history of the class warfare that was brought on largely by governments that realized dividing and conquering the citizenry is the best way to ram through your policy goals. So I don't like that part of her plan. They also want to propose a 40. I really don't like this one. Now I'm talking my own book. A 40% capital gains tax on long-term, sale of stocks. And so, again, I view that as a tax grab. It would be really nice if somebody in government from either side proposed to me how they were going to quit spending so much money, being that the current debt is unsustainable. So we'll see. Again, both parties are doing a hell of a job of making me not want to vote for either of them. Although, again, there are some things on the left societally that I like and some things societally on the right that I don't like. And then vice versa. There's some, we're going to have less government proposals from the right. I actually like some of those proposals. And yeah, Ms. Kamala on this tax proposal, though, is I think highly mistaken. And I hope that instead of us arguing about, the names and the name calling and the nicknames, I hope we can get into dissecting who this affects, why we like it, why we don't like it, what you believe it leads to, and then how dangerous or not dangerous it can be. The same way, like, I'm a big Second Amendment guy, right? But I do think there's a hell of a smarter way to own guns in this country. Like, I don't think that, like, my 21-year-old should just be able to walk in, pick up an AR, never had training, never shot one, never took a class, didn't apply for anything, and now can just go around and, carry it around Austin, Texas. Like, I don't think that's the most responsible way to introduce an AR to my 21-year-old son. And then so that doesn't mean I'm anti-Second Amendment. To the contrary, I'm super pro-guns. Like, I'm all about, self-defense and all of that. But I do think we can have a conversation about a better way to do things. Do we need more tax revenue? Yes. We also need to quit spending as much. Both things can be true. Anyway, that's my rant on Kamala's policy. But I am at least encouraged that she's standing on it for now. At least you're giving me the information I need to make a decision about whether or not I want to go ahead with a vote. And I would like to see more of that from the right so I could be a little clear on, okay, you want to deny that you're involved with Project 2025, then what is your plan? Like, what is your plan? To spell that out for us, right? Because the things that I've heard are, not the most appealing or progressive things that I've seen from a presidential candidate in quite some time.
So much there. I was taking notes. Let's see if I can make any sort of sense and weave it into a narrative that goes in some direction that is digestible. I was reading excerpts from this book this week. I told you I was going to start holding up books. This is The Gold Bug from Mr. James Dines, which is out of print, so now I got to sell And we have the last remaining copies, which is why I was looking at it, because I'm moving out of this office and back to my house, which I've told you, to my home office. And I have the remaining copies here in this office. So we're trying to sell them. We're trying to sell them. So we'll get a link up because these are the last remaining hardback copies. Amazon says they literally have one left. And so anyway, there's an excerpt in here, and he was talking about, Mr. Dines was talking about, the national debt and things like that. And he was saying that the numbers that we use now are more suited to astronomy than to finance. Right. And so I was starting to think about astronomy, which is one of the notes I wrote down. And when I was thinking about astronomy, I was thinking about, President Biden announced a moonshot in the past week. It was a cancer moonshot, Gerardo. A moonshot. A fucking moonshot. That they're gonna, tackle cancer. And, this is clearly copy psychology driven, right? A moonshot, it conjures up images of what? Going to the moon and JFK and the Manhattan Project. A moonshot. You know how much we're allocating to this moonshot to beat cancer, Gerardo?
I think it was some fucking meager number, like 100 million or something.
It was $130 million, which sounds great. You can put up 130,000,000, and to the feeble mind, or to the mind who doesn't understand exponential functions and astronomically large numbers, right? Millions, billions, trillions, quadrillions, etc. 130 million, fuck, that seems like a lot of money. It's a moonshot, in fact, as they would call it. And then you actually, if you know how much money that is, certainly if you know how much that is off the top of your head relative to other things, that's a fucking crock of shit. Like, one single SpaceX launch cost $100 million. You're going to, solve cancer with $100 million? How many billions of dollars have we sent overseas in the past 6 months to a year? With a B, not with an M. Why don't we spend Bs to fight cancer here at home? And that's what I mean sort of by the disingenuous, not just of the Democratic Party, but, of both parties, telling me you're going to have a cancer moonshot. Fuck out of here with your $130 million, right? The national debt is $35 trillion. And I know that, and a lot of other people know that. And that's why and I'm just going to go down my list. That's why, again, Mr. Rick Rule's got a lot of air this time. It's a spending issue. It's not a revenue issue, right? And that's why I was saying, one of the biggest implications for us in this fourth turning is going to be the taxes.
Yep.
There's going to be a national wealth tax. You can see them positioning for it. And that's sort of what you were saying,
Yep.
I heard Michelle Obama saying, where I come from, we don't look, I heard my parents, it was certainly her parents, not her, and I'll tell you why in a second. My parents didn't look kindly at people who took more than their fair share, always back to that fair share, who took more than, what was theirs. And it's like, you live in a $27 million house, Michelle. How much do you need? Have you taken more than your fair share? Get out of here with some of that. And so you were talking about the unrealized gains tax, and this relates to something that I've been saying, is that, $100 million is obviously a lot, and we're not there. But we're already phased out of a lot of tax credits that you get from mortgage interest and things like that. And that starts at just whatever, $150,000, $250,000, $300,000. And if you talk to anybody with kids who's raising a family on $150,000, $200,000 right now, they are not wealthy. I talk to these people, I see these stories, There was one, I don't know if it was a Wall Street Journal or something else, a family both making six figures. They were pulling in $230,000, and they couldn't buy a home with 30% of their income, make the payment work for 30%. They could buy a home, of course, but it would take 40, 50% of their income. They're making $250,000 a year. And so that's what I'm saying. Then attack the wealthy or pay your fair share. It's going to apply to people who are making, 100,000 seems like a lot in the psyche when the average is 53,000 or whatever. Just like 130 million seems like a cancer moonshot. But 100,000, 200, 300,000 isn't a lot in the scheme of where we are now. And so to say that you need to pay your fair share when you're already making that much, when you got to pay private school tuition because you don't want your kids to go to public school, all that sort of stuff, right? That doesn't add up. So what else did I want to say? I did the moonshot. I did the wealthy under attack. I did the Manhattan Project, by the way, was $35 billion.
With a B.
With a B. So the last thing I was going to say was the orator. And that's perfect because, we can normally have on the TV while dinner's getting cooked, and then we we turn it off when we sit down at the table. And, the past couple of nights I've seen, and it's so funny, you see Mr. Clinton get up there and, I have a soft spot in my heart for Mr. Clinton.
Yeah,
I'd like
no
to
doubt.
hear him orate as well. And, Mr. Clinton went to Yale, right? And then the next speaker gets up there and demonizes J.D. Vance for going to Yale. Like, middle Americans don't go to Yale. It's like the
what?
fucking president, the former president who was just up there, who's on your team, went to Yale, you dumb fuck.
It's like
what
my
are
kid
you
brother
talking
went to
about?
Harvard. He went from a trailer park to Harvard. He
that's
earned
what
it.
you
Like,
want.
that's what you want to happen. I'm not demonizing my little brother because he went to Harvard. He was smart as all hell and he made a great career as a journalist doing so. I'm like, that's the American dream, to go from immigrant parents to the trailer park to Harvard.
No doubt.
And so, yeah. I didn't mean to cut in, but yeah.
No, that's it. So that's it. No, so then it was Michelle, and then it was Barack, who I've said a bunch of times, like, Barack sucked me in 2008, man. I was about it. I was like, look at this cat. He's going to change some shit.
The man can
like,
pitch, man.
I'll fucking vote for Barack. Like, let me get that little Barack circle in 2008. And then, 2009, 10, 11, 12 happened, and it's like, wait, you're bailing out the banks and bombing more Muslim countries? Like, this isn't where it's at, guy. Like, and then after 2012 and on is when I sort of just became jaded.
You're like, oh, everybody's doing it. Right.
Right.
Both sides
so that's
do it.
the point. You nailed it, right?
Yep.
So Barack was on TV, and my wife was saying, basically what I was just saying about Clinton, how she likes Barack. And I was saying, man, I don't like Barack. Like, he's the one that, basically, calls my, jadedness with politics or whatever. And she's like, yeah, but at least he taught you a lesson. He taught you that it doesn't matter, like, what side is in there. And I was like, so why do you like him then? I was like, that's not like a positive thing that he taught us that lesson. He still stood up there and said he was going to do all this shit and didn't do it. And she said what you just said about Michelle, to tie it all back to how you started. Yeah, but he's funny and he's charismatic and he's a great orator, right? And it's like, yeah, by the time he's done talking, the national debt's going to be $35.5 trillion. So
yeah, no, and look, like a lot of politicians, most politicians, there were some things that he did that I think, history will look on very, very favorably. And I think, he brought a lot of decency to the White House. He brought a lot of, healthcare. I think he revolutionized the way we approach healthcare in this country. And it obviously clearly needs that to continue from both parties, but I think he furthered that conversation. Then there's things where I'm like, hey man, you promised a comprehensive immigration plan in the first 90 days and you went out and you got the Hispanic vote on the back of that. And then you were like, nah, like, I'm busy with this healthcare thing that I've been wanting to do since college. And I'm just, I'm looking at that and I'm going, no, you promised Hillary you would take care of this for her if you got in there, and you went out there and you just lied to the voting bloc that you needed to get elected. And so, yes, do I think he's charismatic? Do I think he's a gifted speaker? Do I think he's a brilliant man? Absolutely. I don't think anybody's going to argue that he's an intelligent guy, but he's still a politician, right? And that's really where I'm trying to go with this whole thing is focus on the policy, folks, and try, again, the Wayne Gretzky thing. I say it almost every week. Go to where the puck is going, not to where the puck is. It's how you make money in the space. It's also how you see policy develop over many years and decades. And, I'm going to turn 46 this year. I'm not the oldest, but I'm not the youngest anymore. So I've seen enough presidencies and cycles to understand the methods and why the divisiveness is beneficial to the people in power, which is why I advocate for term limits from top to bottom, whether it's president or local council or Supreme Court justice. Like, I just believe term limits and getting the lobbyists out of government solves a lot for us. But maybe even one day while we're alive, Nick, maybe even one day while we're alive. I'm supposed to remind all of you to go to dailyprofitcycle.com/subscribe to get the thoughts and opinions of all of our talented editors, including Mr. Hodge and myself. Well, we thought it was going to be a short one. It never is. I think, again, as we get closer to this election, you should expect more volatility. Hopefully we can keep focusing on debating policy. And I think it's going to be a heck of a September, October, November, December, Nick, as far as the markets go, and especially, where I dabble exclusively the resource space and where you dabble heavily the resource space. I think it's going to be great. Any closing thoughts there?
No, I'm still waiting for the end of the month. We got these tech earnings. They're going to be hugely, have a big implications for the market. The market's been trading on the sentiment and the movement of these big tech names. And so you get NVIDIA earnings. It's going to be good to get out there on the conference circuit. Happy to see people out there. I do think money is going to start flowing. It's been a light and a slow summer. But I see people hiring IR directors and people, which means they're ready to start getting their message out. And why wouldn't you with gold at $2,500 and silver about to print a 30 handle anew? So we said last week that New Orleans was coming up. I believe I have links now to share, so I'll get those down in the description. We'd love to see you in New Orleans in late November. It is, and the Gold Bug book, of course, we'll have a link to that now that we are selling copies, and people are buying them. I actually got to go to the post office today to mail a few out. So that's it. Next week we'll be here. And then likely going to take a week off after that for travel, but we'll keep you informed of what we're doing and why.
Work travel, by the way, folks. So for subscribers, you all could expect some exclusive footage here, I think at the end of September, early October. Excited to make that trip. I am Gerardo Del Real along with Mr. Nick Hodge. This was the 283rd episode of our weekly therapy session that we call Investing in Bizarro World. Have a great week, everyone. Be kind to each other. Ask yourself, is it worth it? And don't let the moon take you to that twilight zone. It's a wonky world out there. Be careful, folks.
See ya.
Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.